in Reppond. Today is May 21, 2025. Thank you for watching my YouTube broadcast. So I will get into the data for today. The market, the stock market has been going up a lot. That's illustrated in the last week in the yellow box. This shows that starting at the top, developed markets, emerging markets, NASDAQ 100, S&P 500, Dow Industrials, and then I put in long-term government bonds and the small cap Russell 2000. So you can see, excluding the bonds, that all of them are positive. And then year to date, they are all positive except for the Russell 2000 is still down 5%. It's been terrible. But the other U.S. equity indexes and the foreign indexes that I show are positive. But when you look to the right, you can see the dots, green dot or red dot, positive or negative, relative to their 20, 50, 100, and 200-day moving averages. The bonds are doing so terrible, they are below all four moving averages. Almost all of the others are above all of the four moving averages. Okay, the S&P 500 breaks down into 11 industry sectors. These are listed on the on the left, and then just to the far left are the symbols for the ETFs for those indexes. So it's interesting, this last week, every single one was positive. Some of them, you can look down the list, you can see a couple of them, technology and consumer discretionary, more offensive type sectors were up the most, up over 7%. To the far right is the where they are relative to their moving averages, the 20, 50, 100, and 200-day moving averages, and in the pink box, where they are year to date. And again, the ones that are the most negative are consumer discretionary, healthcare, and retail. The S&P 500, this is a three-year chart, so for the last 2.5 years, the S&P 500 has done very well in going up. And you can see where it rallied from early April, rallied up since that time, and has now crossed over its 20-period moving average. I put it on a candlestick basis, and again, moving through that average, and it seems to now have momentum to move on up. Doesn't mean that'll happen every week, certainly not every day, but it moving more in an upward direction, and a lot of the negative is behind it. So we'll see if that holds. But if it holds this week, the likelihood is going to continue. And then this is when I put this on, of course, it's candlestick basis, but you can see the 5 candlesticks to the far right. That is this past week. So this is a 3-month daily chart, not a weekly chart. So if you want to see what's going on each day, you can see the positive and the negative. And during about the first half of this period, say the first month and a half, pretty negative. And then it took off, and it's pretty positive on a daily basis. NASDAQ 100 compared to the broad market, the S&P 500, you can see it's gone up a lot, and then it went across quite a bit, up and down without a clear direction. Now it's moving back up over its 20-period moving average, signifying that growth. The NASDAQ 100 is probably, at least in this period, has outperformed the broad market, and looks like it's probably going to continue. This is an interesting chart because you see the growth stocks and the value stocks, part of the S&P 500. And the growth stocks are the periods, when it goes up, it favors growth. When it goes down, it favors value. So you can see all the black arrows. I put 4 of them on there. You can see that growth way outperformed value during those periods and shot up. And then you can see these periods where value took over and went down. And there are 3 of those. Where does it look like at the very far upper right, where we are today? Where do you think it's going to go from here? If it follows that pattern, it's going to favor value. Doesn't mean it's going to go down. It just means it's going to favor value. So we use an approach of value or growth. We emphasize value or we emphasize growth based on a relative strength basis, which is what this chart is. So this tells us that, there are just times you want to be in value and there's times you want to be in growth, as opposed to ignoring that and just staying in the general market. The S&P 500 relative, which is large cap companies, relative to small cap, IWM, and when it goes up, it's favoring large cap. When it goes down, it's favoring small cap. So you can see during all of this year and going back to November, it's almost always been favoring large cap. So large cap and growth are the 2 things that are in favor now, and but it won't stay there. It will shift from large to small, and it will shift from growth to value at some point. This is what I was talking about with the long-term government bonds. TLT is the ETF, and you can see at the very far right, you see it moves down, which signifies last week. Moving down. This morning, today, the beginning of this week, down quite a bit. So bonds are under pressure. This is not a growth picture for bonds, and it is not a case to be made for buy and hold 60-40 stock and bond portfolios. This is a terrible picture. If you're buying it from an advisor or salesperson who's trying to sell you on a 60-40 portfolio or justify it, I bet they won't show you that chart. When you take long-term government bonds, put it on a daily basis with candlesticks back to August, you can see that short-term move, and this kind of breaks it down a little bit further, and where it is now, again, moving in a southerly direction. The dollar took a big pullback, and now the last couple of weeks has been going up, and but you've got that intermediate term trend of downward direction. Gold had a correction last week, but is still in a long-term uptrending mode. And by the way, after the downgrade of the U.S. credit over the weekend, gold and silver both are back up again. And this is a silver chart, kind of the same thing, except silver is more volatile. It's a bigger moves up and bigger moves down. So it's, but in general, it's moving in the same direction. Bitcoin had a good week. It's moving up and staying above its 20-period moving average. Volatility index, the VIX, is down. It was up around 25 or so last week. And since stocks have moved up this week nicely, it causes the volatility index to drop. So a downward direction in volatility is a good indication for equities. And boy, has it dropped. The U.S. versus South Korea. This is the stock market. So we use SPY as a surrogate for the U.S. market, and on a relative strength basis relative to EWY, which is the ticker symbol for the major Korean market. And you see the tick up at the end, at the very end, and that shows that the U.S. is doing stronger than South Korea. But that pullback that lasted for, 3 or 4 months, favored South Korea. Gold and silver. As I said, gold was down a little bit, 2.4% for the week. Silver down 2%. The gold-silver ratio is 99 to 1. A monster box of silver bullion, just pure silver, $17,085. Includes a $1.89 markup over spot. That brings it to $34.69 per pound, or excuse me, per round. Can't read. Okay, thank you for watching. If you have questions or comments, leave them in the comment section below.